While the West is busy debating technical charts, analyzing RSI indicators, and arguing about resistance levels, something far more dangerous is happening quietly in the physical silver market. Something that changes the entire game. Something that makes your futures charts and technical patterns completely irrelevant. Because while Western markets are playing a paper game, treating silver like just another commodity, India is doing something completely different. India is not trading silver. They are not speculating on price. They are removing silver from the global system, systematically, aggressively, and permanently. When a country with 1.4 billion people, one of the world's largest economies, turns silver into a banking asset, it stops being a bull market story. It becomes a structural rupture, a breaking point where the old rules stop working and new dynamics take control. Today, you're going to understand why India has just created the most powerful physical squeeze in silver history. A real physical squeeze, where real metal is being removed from circulation and vaults are draining, and why the price on your screen no longer tells you the truth about what silver actually costs. Let's start with a single number that invalidates most silver market analysis you see online. India imported approximately 21.4% of all refined silver in the world. Let that sink in. More than 1/5 of every ounce of refined silver produced globally went to just one country. This isn't a forecast, this is historical data. In 2025 alone, India imported $9.2 billion worth of silver. That's a 44% year-over-year increase. 44% growth, despite silver prices nearly tripling from $29 at the start of 2024 to $80 by early 2026. Here's the critical detail. This surge happened despite sharply rising prices. When a country increases imports even as prices rise dramatically, that is not speculation. That is inelastic demand. It's buying driven by necessity, not opportunity. It's the demand profile of a critical resource, not a discretionary commodity. Now, let's compare two different silver markets. On your screen, on the COMEX, silver trades around $79 to $80 per ounce. That's the paper price. But in the physical world, the situation is completely different. In China, physical silver is trading near $90 per ounce. That premium has been persistent for months. It's the physical market telling you what silver actually costs when you need delivery. In India, it's even higher. Why would the same metal trade at such different prices? Because India's price reflects the full reality of acquiring physical silver. It includes a 6% import duty and a 3% sales tax. On top of that, physical premiums have reached 10% above the spot price due to scarcity. This is what happens when demand exceeds available inventory. The paper market says silver is $80. The physical market says it's $90 to $95. That divergence is the market screaming at you that something is broken. Paper prices have disconnected from physical reality. And here's the principle that matters. When physical metal becomes scarce, paper prices lose all authority. Availability is not negotiable. If you have to pay $95 to actually get the metal, then the real price is $95, regardless of what some contract says. Now we reach the moment that fundamentally alters the silver market for the entire world. Starting April 1st, 2026, the Reserve Bank of India, their central bank, will allow silver jewelry and artifacts to be used as collateral for bank loans. Silver becomes bankable collateral, with the same legal status that gold already enjoys. Analysts are calling this the remonetization of silver, the official recognition that silver is money, a store of value. But the actual consequences are far larger than most people realize. Let me show you the numbers. Indian households are estimated to hold 29,000 tons of silver jewelry. That's nearly 1 billion ounces, plus another 4,000 tons in silver coins. In total, private holdings exceed 1 billion ounces. That's more than a full year of global mine production sitting in Indian homes. Before this policy change, if Indian families needed cash, they had to sell their silver. That silver entered the scrap market, got recycled, and flowed back into the global supply chain, acting as a buffer that helps balance deficits. But now, they don't need to sell. They can just walk into a bank and get a loan against their silver, just like they do with gold. This means a massive source of secondary supply of recycled silver is about to be shut off. That buffer is disappearing. People who used to be sellers in times of need are now becoming holders. This one policy change locks up 1 billion ounces of silver, removing it from the global market and tightening supply in a way we've never seen before. So let's connect the dots. India is already absorbing over 21% of the world's new silver production. Their demand is inelastic, meaning they buy more even as prices rise. Now, their government has just made a decision that will drastically reduce the amount of recycled silver coming out of the country. We have record-breaking demand on one side and a major supply source being cut off on the other. This isn't a temporary squeeze by a hedge fund. This is a structural shift driven by a nation of 1.4 billion people. While the West is distracted by lines on a chart, India is fundamentally re-engineering the physical silver market. The price you see on your screen is becoming a fantasy. The real action, the real price discovery, is happening in the physical world, where a nation is treating silver not as a trade, but as money. The game has changed, and those who only watch the paper price are going to be left behind. Let's talk about silver, and specifically, let's talk about India. A monumental shift is happening that could change everything for the silver market. For generations, when Indian households needed cash, they would sell their silver jewelry, but now they don't have to. A new policy allows them to take their silver to a bank, pledge it as collateral, and get a loan. They get the cash they need, and they keep their silver. The metal stays their property, locked in a bank vault, not sold. This isn't just a small change, it's a fundamental supply shock. Think about it. All that silver that used to be melted down and sold back into the global market as scrap supply, that flow is about to stop. Instead of millions of ounces re-entering the market each year, that source could just disappear. If India historically provided 50 million ounces to the scrap market and that number drops to 0, that's a massive hole in global supply, around 5% of the total, gone almost overnight. This isn't about sentiment or wishful thinking, it's simple math. But it gets even more interesting. This new policy also supercharges demand. Now that silver is officially bankable, its status changes. It's not just jewelry anymore, it's a financial asset, a way to secure a loan. This changes how families view silver. Why sell it when you can borrow against it? This encourages them to buy more, to accumulate it as a real form of savings. Demand could increase not by a small percentage, but by multiples as this cultural and financial shift takes hold. Now, layer on top of that India's exploding industrial demand, especially for solar energy. India is on a mission to build out its green infrastructure. In 2026 alone, they plan to add 45 gigawatts of solar capacity. Each gigawatt requires about 3 million ounces of silver. Do the math. That 135 million ounces of silver needed just for 1 year of solar panel production in one country. That's a staggering 16% of the entire world's annual mine supply. This is why major companies like Adani Green Energy and Reliance Industries are not speculating on silver. They are stockpiling it. They are securing long-term physical supply contracts years in advance because they know that without silver, their entire business model breaks. Production lines halt and projects fail. For them, silver isn't just a commodity, it's a critical component they absolutely cannot run out of. And there's a geopolitical angle to all of this. India is strategically shifting where it buys its silver. It's importing directly from Russia, settling the trade in their own currencies, not US dollars. This is a deliberate move to reduce reliance on Western financial systems and bypass potential supply restrictions from countries like China, which is also keeping more of its own silver. Government advisory bodies in India are even pushing to classify silver as a critical national mineral, putting it in the same category as rare earths and lithium, essential for national security and economic growth. So let's put all the pieces together. You have ancient cultural demand in India that is constant, regardless of price. You have a brand new banking demand that turns silver into a core financial asset. You have explosive industrial demand from the solar sector that is non-negotiable. At the same time, China is absorbing huge amounts of silver for its own needs. That's 2 countries, with nearly 3 billion people combined, all competing for a finite supply. And what's happening in the West? As gold prices climb, investors are looking for the next big opportunity. They're seeing the gold to silver ratio and realizing silver is historically undervalued. Platforms like Bullion are reporting over 300% growth in new silver buyers. This isn't just a niche market anymore. Mainstream retail investors are waking up. When you combine all these forces, you get the perfect storm for a physical short squeeze. This isn't a paper game in the futures market. This is a squeeze on the actual physical metal. It happens when industrial users, governments, and households are all trying to get their hands on silver at the same time, and there just isn't enough to go around. The metal is being taken out of circulation faster than it can be supplied. How does a physical squeeze resolve? The price has to rise high enough to force someone to stop buying. But with industrial and national security needs being so critical, that balancing price could be dramatically higher than where we are today. Major institutions like Bank of America have published research with silver price targets ranging from $135 to over $300, depending on how much the gold to silver ratio compresses. If that ratio moves from today's levels back toward its historical average, the numbers become truly mind-boggling. With gold at $4,500, a ratio of 30 to 1 implies $150 silver. At a ratio of 15 to 1, it's $300 silver. What makes the demand from India so uniquely powerful is its permanence. When silver enters an Indian household, it tends to stay there for generations. It becomes family wealth, passed down through the years. It doesn't get sold back into the market when the price goes up. It effectively leaves the tradable supply forever. This is fundamentally different from Western investment, which is often short-term. We are witnessing a structural realignment of the entire silver market, with India at the absolute center. The combination of cultural, financial, industrial, and geopolitical forces all pointing in one direction is something we rarely see. The numbers are speaking for themselves, and they are telling a very, very compelling story. In the West, silver is often just a trade, a speculative play for quick profits. But in India, it's something entirely different. It's wealth, it's savings, it's the financial bedrock for families. It's a core part of religious ceremonies and traditions like dowries. When a Western fund buys millions of ounces of silver, that metal might come right back to the market next year. But when Indian households buy that same amount, it's a different story. That silver is gone. It's taken out of circulation, joining the billion ounces already tucked away in Indian homes, likely never to be sold. Now, a monumental shift is happening that makes this permanent demand even more powerful. The Reserve Bank of India, their central bank, is implementing a new policy that allows silver to be used as collateral for loans. This means there's even less reason for anyone in India to sell their silver. Why liquidate when you can borrow against it? This isn't just a temporary disruption. It's a permanent removal of supply from the global market. It's a structural change in how hundreds of millions of ounces of silver move, or rather, how they stop moving and get locked away. Let's talk about the sheer scale of this. In just 1 year, India imported a staggering $9.2 billion worth of silver. At an $80 per ounce price, that's 115 million ounces. To put that in perspective, that's 14% of the entire world's annual mine production. One single country is buying 14% of everything that's dug out of the ground. And that's just imports. Add in their own domestic production, and India is consuming roughly 16% of the total global supply every year. And the timing couldn't be more critical. This RBI policy isn't some far-off idea. It takes effect on April 1st, 2026. That's just around the corner. Commodity markets don't wait for events to happen. They anticipate them. Smart money is already positioning for this. So what should we expect between now and then? An accelerated buying frenzy. Banks will be stockpiling inventory and households will rush to accumulate more silver before the policy kicks in. This creates a massive demand surge right when global supplies are already incredibly tight, with exchange inventories at multi-decade lows. The RBI's policy is like dropping a lit match on a pile of dry kindling. Now, imagine what happens if this idea spreads. What if other countries, with a similar cultural appreciation for precious metals like Pakistan or Bangladesh, decide to follow India's lead? What if treating silver as bankable collateral becomes a trend across Southeast Asia? India's 115 million ounces of annual imports could easily become 200 or 300 million ounces across multiple nations. The supply deficit would become completely unsustainable. India might be the first domino to fall, but once one central bank legitimizes silver this way, others are likely to copy the playbook. The physics of the supply-demand balance would completely break. There simply isn't enough metal to go around. This brings us to a crucial point. Who really sets the price of silver? For years, it's been the paper markets in London and New York, but that's changing. India is becoming the true price setter. Why? Because they are the final destination for the physical metal. India's demand is relentless, driven by industry, culture, and now official government policy. They have consistently shown they will pay whatever it takes, premiums, taxes, import duties, to secure physical supply. When the world's largest buyer doesn't care about the quoted price on a screen, that buyer sets the real price. Paper markets can say silver is $80, but if India is paying $95 to get the physical metal, then $95 is the real price. The paper markets are becoming irrelevant, lagging indicators of where the price used to be. We are witnessing the physical market reclaim control from the derivative markets. And when that happens, get ready for volatility. Physical markets are much less liquid than paper markets. It takes a lot to move the paper price, but when physical supply is tight, even small orders can cause massive price swings. Expect larger moves, more gaps, and sudden jumps in price, not because of manipulation, but because physical supply at lower prices simply runs out. The next available ounce might be offered at a dramatically higher level. So what should you watch for to see how this unfolds? Keep an eye on India's monthly import data. If it keeps accelerating as April 1st approaches, that's confirmation of the buying frenzy. Watch the physical premiums in India. If the gap between their local prices and the global spot price widens, it means local supply is getting tighter despite massive imports. Look for announcements from Indian banks about their new silver-backed loan programs. And pay attention to policy news from other countries. Who will be the next to follow India's lead? Also, watch the gold-to-silver ratio. If it starts to fall, it's a sign that capital is flowing into silver, anticipating this remonetization. And most importantly, watch for any supply disruptions. A strike at a major mine, political unrest in a key producing country. Any disruption gets magnified when there's no buffer. India is already absorbing all the slack. Any loss of supply will create immediate shortages that can only be resolved by one thing: a much, much higher price. Price will have to rise to whatever level is necessary to balance supply and demand. And it could happen quickly. When a nation of 1.4 billion people officially treats silver like money again, price is no longer just an opinion or a line on a chart. It becomes a mathematical consequence. A consequence of supply being unable to meet demand. A consequence of structural policy changes that are altering the market forever. This isn't hype or speculation. This is verifiable data, official policy, and billions of dollars in real-world transactions. We're talking about multiple powerful forces converging at the exact same time. And in the world of markets, structure always wins. Physical reality always wins. And the physical reality is that the silver market is undergoing a seismic shift, with India right at the epicenter. Have you ever seen a market break in real time? Not a crash, but a fundamental shift where the old rules just stop applying? Well, get ready, because that's exactly what's happening in the silver market. And the epicenter of this earthquake is India. Now, this isn't a story about Wall Street traders or complex derivatives. This is a story about physical reality asserting itself. India is breaking the silver market, but not through speculation or manipulation. They're doing it through sheer, relentless accumulation. They're doing it through brilliant forward-thinking policy. They're doing it by simply recognizing silver for what it truly is, a critical industrial material, a deep-rooted cultural treasure, and most importantly, a monetary metal. And here's the kicker. The market hasn't fully woken up yet. The price you see on your screen, it hasn't adjusted to this new reality. The mainstream financial news, they're silent. They haven't reported on this yet. But trust me, they will. They'll have to. Because what happens when an unstoppable force meets a finite object? What happens when global supply starts to vanish, just as demand from every corner of the world accelerates? What happens when governments begin to remonetize silver and critical industries start stockpiling it out of fear? Eventually, the price has no choice but to respond. Eventually, reality wins. The physical market will force the paper market to face the truth. That moment is coming, and the groundwork for that massive repricing is being laid right now by events in India that most people are completely ignoring. Let's talk numbers, because they tell a staggering story. In the first 4 months of this year alone, India imported a colossal 4,172 tons of silver. To put that into perspective, that's more than the entire U.S. Mint has sold in American silver eagles over the past 3 years combined. Let me say that again. 4 months of Indian imports surpassed 3 years of sales for one of the world's most popular bullion coins. And it's not slowing down. These imports represent a massive drain on the available global supply, pulling physical bars directly from vaults in London and Zurich. Think about it. We're talking about roughly 1/3 of the entire global mine supply for those 4 months being vacuumed up by a single country. This isn't just a small uptick in demand, this is a structural shift. The silver is leaving the Western financial system and moving east, and it's likely not coming back anytime soon. This is creating a supply squeeze of epic proportions, happening right under our noses. But why is this happening now? There are a few key drivers. First, there's industrial demand. India is undergoing a massive green energy transformation, aiming for 500 gigawatts of renewable energy capacity by 2030. Solar panels are a huge part of that, and silver is an essential component in every single one. Each panel needs silver, and as India's manufacturing of these panels ramps up, their demand for silver is set to explode. This isn't speculative demand that can disappear overnight. It's baked in, non-negotiable industrial necessity. Then you have cultural and investment demand. In India, silver isn't just an investment, it's woven into the fabric of society. It's a traditional gift for weddings, festivals, and religious ceremonies. With a growing middle class and rising disposable incomes, this cultural demand is stronger than ever. Many Indians see silver as a store of wealth, a way to protect their savings from inflation, especially in rural areas where access to formal banking can be limited. They are buying physical silver, holding it, and passing it down through generations. But the real catalyst, the game changer that the market is sleeping on, is a recent policy announcement from the Reserve Bank of India, the RBI. This is the big one. The RBI is preparing to allow silver to be used as collateral for banking purposes under a new framework. This is a form of remonetization. It means that the vast, privately held stockpiles of silver across India can now be brought into the formal financial system, unlocking immense value and liquidity. This policy signals to the entire country and the world that the Indian Central Bank views silver as a legitimate, high-quality asset, on par with gold. This is a massive vote of confidence. It encourages banks, institutions, and individuals to acquire and hold more silver, knowing it can be used as a productive asset. This isn't just a headline, it's a fundamental change in how silver is treated within one of the world's largest economies. It transforms silver from a static treasure into a dynamic financial instrument. When a government with 1.4 billion people officially reclassifies silver as a core financial asset, what do you think happens to demand? It goes vertical. We are talking about inelastic demand. That means that even as prices rise, the buying continues because the reasons for buying are structural, not speculative. The recent import data proves this. Despite rising silver prices, imports in April grew by a staggering 44%. Buyers are not being deterred by price. They are rushing to acquire the metal before it gets even more expensive. This is what a market breaking looks like. Supply is disappearing. Industrial demand is accelerating. Investment and cultural demand are unwavering. And now a major government is actively remonetizing the metal. The conditions are perfect for a violent repricing, a shock that will catch most people completely off guard. They'll wait for the news to tell them what happened, but by then, it will be too late. The metal will be gone. The price will have already moved. What seems obvious in hindsight will become incredibly expensive in real time. If you're starting to see the big picture now, if you understand why India's actions are a structural break and not just another blip on the radar, then you know why this story is so critical. If you see why the RBI's collateral policy is the fuse being lit for a price explosion and not just an interesting news item, you're ahead of the curve. And if you recognize that importing over $9 billion worth of silver in a few months, with demand still accelerating, is a signal that will overwhelm global supply, then you need to pay close attention. We are tracking this situation as it unfolds, week by week. We're analyzing the import data as it's released, monitoring the policy implementation, and watching for the inevitable consequences. Will the supply shock fully materialize? Will physical premiums in the West widen even further as inventory dries up? Will the gold to silver ratio finally begin to compress, reflecting silver's true value? Will the paper price be forced to catch up with physical reality? This isn't a prediction about something that might happen years from now. This is an analysis of what is happening right now. India is physically removing silver from the global system. India is effectively remonetizing silver. India is creating the perfect storm for a physical squeeze that the paper markets are not prepared for. The countdown is on. The structure is in place. The math is undeniable. What happens next isn't speculation. It's a consequence of the actions already taken. Thanks for watching, and I'll see you in the next analysis. Don't forget to subscribe and turn on notifications so you don't miss our updates on this developing story.